The e-commerce firm Pattern going public. It's happening today right here on the NASDAQ. The company helps brands resell goods on marketplaces like Amazon and Walmart. Joining us right now is David Wright, Pattern CEO. Good morning to you. Congratulations. It's a big day. You. Go back a dozen years and tell us what was the initial idea for this company and what is it now on a relative basis to what you originally thought?
Oh, yeah. It's significantly different. You know, the way it started is I actually had a cousin and she created a little, girls headband brand. And we got talking about that. And I'm, my background is all in the data tech side. And, there was one comment that was made, it's very formulaic. Revenue for a brand is traffic times conversion times price. I was like, so from then on, it became almost a video game. And here we are. Now we help brands across the world.
Well, as I was saying, so for those who don't understand or know this business, what is it exactly that you do? Because it's really on the back end that people would see this.
Tech, AI-enabled, helping brands across marketplaces globally. We connect 61 marketplaces, 20-plus offices around the world.
And when people think about investing in this company today, what is the comparable? I mean, everyone's always going to say, when the bankers sat with you and put their presentation together, what were the quote-unquote comps for this?
Yeah, well, the thing that came up the most is they're like, you guys don't really have a great comp in the market because we're technology-enabled, AI-enabled e-com, so great space around, all around, but yet the way we monetize it is we move inventory. So it caused a lot of head scratching. It's a great space, a great way to monetize, very sticky.
Okay, but help understand the investor class who's watching this right now. When they think about comps, what kind of multiple would you even contemplate?
I don't know. I think that's. I'm not an expert on multiples. I think that's leave that to the investors, the bankers. They decide. We're just going to keep building.
What's a win for you today? Because one of the big questions always about an IPO is how much cash you can actually raise versus do you want the stock to... We always have debates about like the Figma IPO recently, which was obviously a huge, crazy day, and then obviously came down.
Yeah,
was that a good thing? Was that a bad thing?
I don't think it's a good thing. I think, the slow build, if you're talking... Because it's all team-based. At the end of the day, teams run companies, and if you have that mojo inside of a team over years, as you just continue to build, I believe that's the best way to do it. So I don't think starting out like
What's the defensive moat around your business, given what's happening with AI today?
Oh, gosh. I think you'll see a lot more companies like us come through these meetings. That the space, the e-com enabler, if you want to think about it like that, and AI and e-com, you combine those forces. I mean, when we started the company, e-com penetration was sub 10%. Now it's 22% globally, and I think everyone knows where that's going. And then from an AI perspective, you have an environment where it's data rich, you can build sensors, you can actuate them, and you can move millions, billions of dollars one way or the other with small changes.
What do you mean when you say build sensors? What do you mean?
So if you're tracking, you're saying, okay, how do I move a product across a global marketplace? What does a consumer journey look like for a given product compared to its competitive set? AI and technology and data, we have 46 trillion data points, collecting 100 billion data points a week. And so that moat becomes very, very powerful. And it can move the needle a lot for a brand.